And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Bailey Lipschultz in today for Katie Greifeld. We're taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec, and I believe a third party also joining us there from the room. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and our partnership with YouTube. Final trading day of the month, Carol Massar, and for a lot of folks, it's a month to forget.
Yeah, not so great unless you're, a bear in this market or shorting it. But I'm looking at what the S&P down maybe about 1% for the month, a little bit more overall. The NASDAQ 100 down about 2.5% for the month overall. So not a great one. But I got to tell you, the path to it has not been an easy one. That's for sure.
No, I mean, worst month going back to April of last year, which is actually interesting given that it's actually not down that much. It wasn't that bad of a month for the S&P 500, but it just goes to show how much we've seen stocks go up over the last year.
And looking at some of the weakness, Tim, on the day, information technologies down more than 2%, as was financials. We were talking about that on the desk. When you look at these moves that we're seeing in Morgan Stanley and Goldman Sachs, it's not just a normal 1% down day. We're talking about 6, 7, 8% moves on an intraday basis on some of the largest U.S. banks.
Yeah, and also, too, I mean, we're going to get into this a little bit later, but when we talk about some of the moves to the downside this month, yeah, at the index level, you're certainly right, Tim. It's certainly not as bad as it could have been. But when you start to go through some of those individual sectors, you have some significant weakness, particularly in that asset management space, definitely in the software space, deep now into a bear market. As we get the closing bells here on this February 27th, 2026. All of the major indices here in the U.S. are going to close in the red on the day and on the week, but the monthly story is definitely a lot more textured. The S&P right now losing about 30 points, down about 0.4%. It's going to close out the month of April down about 0.9%. The Dow Jones Industrial Average down 500 points on the day, or about 1%, but it is clinging to a modest gain on the month of about 0.2%. The NASDAQ composite down 74 points today, or just about 0.3%, but down 2% or more on a month-to-date basis. And take a look at the Russell 2000, and I want to point this out. A 1.6% loss, 1.7%, on the day, 1.4% on the week, but still holding on to a 0.7% gain on the month and a 6% gain year to date.
All I'm going to say is I can't wait till you talk yields, but we'll get to that in just a moment. I'm going to go back to the S&P 500, kind of an even split, guys. Bailey, we've got 278 names higher for the Friday trade in the S&P 500, 225 to the downside.
Yeah, looking at that on a sector level, again, tech and financials, the biggest drags. But we are seeing outperformance in the healthcare and energy spaces. Just want to call out, guys, the S&P equal weighted index closing in the green at a record, a fourth consecutive day of gains. So as much as we want to talk about tech and banks leading to the downside, there is some green going on.
All right, so let's get to some of the individual gainers, if I may. Let's go to Paramount, Skydance, and Netflix. Definitely some outperformance. Paramount, Skydance up almost 21%, guys, today. And you have Netflix up about 14% here. We know Paramount clinching that deal finally for Warner Brothers Discovery, outmaneuvering Netflix after a months-long battle by agreeing to pay $111 billion for the legendary Hollywood studio. Yeah. We should point out, though...
Outmaneuvering.
Well, here's the deal.
Yeah.
We could have a lot of conversations because Tim and I have talked about maybe Netflix was just really smart in pushing up the price.
$2.8 billion that they didn't have yesterday?
Yeah.
Netflix.
Right. They have, right. But
it's also interesting, too, because, I mean, we didn't really talk about this. This happened while we were on air because Ted Sarandos was at the White House, and he did come out of the White House. Reporters asked him what happened. He was like, I'm not doing any media. And then, of course, a few minutes later, we got the headlines that they were moving on. But there's been a lot of speculation here about what Paramount is paying, whether it's too much, and a lot of jokes online saying that, hey, maybe if Sarandos just waits a couple of years, he can actually maybe buy some of those assets at a fire sale when Paramount, maybe if Paramount doesn't execute on that.
Yeah, let's be conspiracy theorists for a moment.
Yes.
Like, what if Netflix was all about just pushing up the price and increasing the cost of this deal and
I like the cut of your jib there.
Increasing the
Where's your tinfoil hat? Is that down there?
On the balance sheet. I mean, come on. Like, I don't know. All right, we're moving along. It's been a great saga to watch. But anyway, Paramount and Netflix definitely outperforming in today's session. Let's go on over to Dell, number one gainer in the S&P 500. Shares jumping by the most in 2 years. Stock up about 21, almost 22% today, pretty much finishing at its highs of the session. This is after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. Definitely a sign of robust demand for machines, helping fuel the AI data center build. That company, by the way, saying it will generate about $50 billion in AI server revenue in the current fiscal year, which ends in January of 2027. And investors liking what they heard from that company. And then I got to mention Block, ticker XYZ, this one finishing up just shy of 17% here, up the most in about 2 years, at least intraday, after the company said it was reducing its workforce by nearly half in a bet on AI. Yes, Mr. Bostick?
Well, no, but this is important before we move to Tim's decliners here, because, I mean, obviously, if Block does pull this off, the idea that they have these efficiencies and are able to continue generating the same revenues and profits with a lot less, that's great. But what does that mean for the economy? If a company can look at their workforce and say, we can get rid of 40% of y'all, at some point, this is like, isn't this the AI gloom and doom that we were all kind of dismissing a few months ago with regards to, you know, how it's just going to kill all the jobs? And then what? I mean, who's going to be left to buy these services if nobody has a job?
Exactly. Who uses Square if nobody has any money to spend?
Thank you, Tim.
Yeah.
What if it's just overhiring, you know, just trying to cut costs? Mr. Dorsey, who some have questioned before in terms of his management.
That's what I'm saying, though, Carol. If we're going conspiracy theory a little bit adjacent, I mean, you're talking about a stock that's down how much from a 2021 peak, and you continue to expand headcount? It's easy to say, oh, well, we're going to be more efficient. Okay, look in the mirror. Maybe you overhired by, I don't know, 50%, 60%?
Bailey, you can come on anytime.
That's still lost jobs.
I will say he did address
that's
that.
taking from the economy, right? Where are those people going?
But is it indicative of AI and what it's going to do in the future? And
I don't know.
We don't know.
I don't know.
Or is this a very Block-specific Jack Dorsey story?
I don't know.
We'll tell you in 18 months. I think that's what happens.
Yeah, what did our team say? That you got to watch in terms of some of the business expansions and things it's done, whether or not we see the growth in those areas. If you don't, then maybe it isn't just AI helping out here.
Okay, the jury's still out on that, but the conspiracy theories live on. Let's get to some of the decliners on the day today. I do want to start with the banks. Look at this, the KBW Bank Index falling close to 5%. Financial firms grappling with signs that private credit issues are starting to emerge following a series of blows from the threat of AI. The KBW Bank Index earlier in the day fell as much as 6%, all 23 members sliding to end the day. You have Goldman Sachs down 7.5%, Morgan Stanley down 6.1%, Capital One down 6%, JP Morgan down 1.9%. Every member in the red today. Credit spreads also started widening. Wall Street-backed UK mortgage lender collapsed, adding to fear that banks could face rising defaults in the opaque world of private.
And you saw the great story that we had about that letter that was circulating around Goldman Sachs Asset Management. The idea here that basically, you know, trying to reassure clients that what's happening right now, redemption rates, software exposure still relatively low and contained.
Yeah, we're going to be doing a deep dive, and I'm going to a little more on Blue Owl in a minute, but with James Crombie, who edits Credit. He's senior editor for Credit, in just a few minutes. So if you guys want to come over and join that conversation.
Well, Bailey can come up.
Wow, thank you.
Let's look at what happened to NVIDIA after yesterday's rout post-earnings on Wednesday. Shares of NVIDIA today fell another 4%. This after a 5.5% decline, adding to the sell-off today. The stock priced at less than 22 times forward earnings, well below its 5-year average of 37, basically even with the S&P 500's multiples. So some people, at least according to that valuation, are seeing this, dare I say, as a value right now. Investors are concerned that the hundreds of billions of dollars in spending pledged by AI developers will have to be scaled back, which would likely hit NVIDIA's revenue hard. And finally, Blue Owl, to finish out just a tough month for the company. Shares on track for their biggest monthly decline in nearly 4 years. Shares fell today by 6%. Anxiety, turbulence over the private credit industry, concerns over the industry have mounted after Blue Owl halted redemptions in one of its funds and decided to sell some assets to help pay investors. That sparked a drop in the firm's market value. Blue Owl shares down by 6% today.
I'm so fascinated by this story, and I'm fascinated by just how much all these other names are getting dragged down, like Goldman and KKR and Apollo and others. And it gets to the idea, too. It's not even so much whether there truly is a crack going on underneath the surface. It's the idea of transparency. And some of these companies are more important than their CEOs. They need to get out there and start talking about this, assuming that there is nothing to hide there. I do want to quickly, though, point out what we saw in the move in yields, because there was a bit of a flight to safety, not only here on this day, but quite frankly for the month as well. I mean, you take a look at that drop in yields. In fact, this is actually the best month for Treasuries on a price basis in about a year. TLT up 4%. That's the main ETF that tracks long-dated bonds. 4% gain right now for the month of February, and that's pretty much the gains for the year. So that gives you a sense of just how much things have flipped in sentiment in the past month.
On a hot inflation print.
Yeah,
Right?
inflation's back. Did you not know that?
No, I
Massar?
did,
Did
but
you
I'm
think it was
just-
gone?
No.
Oh, you probably don't do shopping. You probably have somebody do your shopping for you and stuff.
Yeah,
like
it's
that.
called my husband.
Yeah, all right. But for us, salted
He
earth
cooks
people
too, by the
who,
way,
have to
Romaine.
go to the grocery
He's a
store
catch.
and see it firsthand, interact with the community.
Billy, I don't know how you do this.